Why Minnesota real estate beats the stock market. Have you ever wondered why some people seem to build lasting wealth while others struggle despite years of saving and investing? Let me ask you 3 powerful questions that might just change the way you think about money and your financial future. First, what if you discovered that the safest path to wealth isn't Wall Street, but the properties right here in Minnesota? Second, why are everyday Minnesotans building generational wealth through real estate, while stock investors often face sleepless nights watching the market swing? And third, if you had to choose between volatile stock charts and steady rental checks, which would you pick for your financial future? In today's video, I'll show you why Minnesota real estate consistently outperforms the stock market. We'll dive deep into facts, figures, and real-life investor stories that prove how powerful this market really is. By the end, you'll understand why the wealthiest people always hold real estate, and why Minnesota is one of the smartest places to plant your financial roots. Before we begin, make sure you hit that subscribe button, give this video a like, and turn on notifications. I'll be sharing insider strategies and local market breakdowns every week to help you build long-term wealth. 1. Stock market versus real estate. The stock market has long been hailed as the holy grail of investing. Financial advisors often repeat the same phrase. The S&P 500 historically returns about 10% annually before inflation. And on the surface, that sounds fantastic. Who wouldn't want double-digit returns simply by putting money into an index fund? But here's the hidden truth. Most investors never actually see that 10%. Why? Because real life gets in the way. Fees from mutual funds and brokers eat away at returns. Timing mistakes happen when investors panic during a downturn and sell low. Emotional decisions, like buying high during a market frenzy, crush long-term performance. Studies consistently show that the average stock market investor earns closer to 5 to 6% a year after all these mistakes, not the promised 10%. Now let's compare that to Minnesota real estate. Over the last decade, home values across the state rose by more than 65%. And that's before we even add rental income, tax benefits, and equity growth. Unlike stocks, which can take decades to recover after a crash, Minnesota property values have shown a remarkable ability to rebound quickly, especially in metropolitan areas like Minneapolis, St. Paul. Real estate isn't just about appreciation, it's about steady, predictable cash flow that keeps investors secure, even when the market wobbles. Here's the kicker. Real estate generates wealth in 4 ways: appreciation, cash flow, loan paydown, and tax advantages. Stocks, on the other hand, only have one: capital appreciation. If the price doesn't rise, you're stuck. But in real estate, you're earning money in multiple directions, which is why over time, it simply outperforms Wall Street for everyday investors. 2. Why Minnesota? So why Minnesota specifically? Why not chase opportunities in California, New York, or Florida? The answer is stability, affordability, and demand. Minnesota sits in the sweet spot that many investors overlook, but that insiders know is gold. Take rental demand, for example. The Twin Cities Metro has a rental vacancy rate of just 3.1%, which is lower than the national average. This means landlords almost never struggle to find tenants. A tight rental market translates into consistent income streams and less risk of prolonged vacancies that eat into profits. Now, consider demographics. By 2030, 1 in 5 Minnesotans will be 65 or older. That statistic alone reshapes the future of housing. Seniors will need places to live, downsized homes, rental apartments, and senior living communities. This creates opportunities not just in residential rentals, but also in healthcare-related real estate, a sector expected to explode in demand over the next decade. Then, let's look at pricing. Minnesota's median home value sits at about $326,000. That's still affordable compared to coastal states, where median values often exceed $700,000 or even $1 million. Lower entry prices mean you can get into the market without overextending yourself financially, while still enjoying solid appreciation trends. It's the perfect mix: lower barriers to entry combined with high potential returns. When you combine these factors, low vacancy, demographic growth, and affordable pricing, you start to see why Minnesota real estate stands out as one of the smartest, most stable investment markets in the United States. 3. Real examples. It's one thing to talk theory, it's another to look at real-life examples. So let's break down what this looks like in action. Take a duplex in Minneapolis purchased in 2018 for $350,000. At the time, the investor put down about $70,000 and financed the rest. Today, that same property rents for $3,200 a month. After covering the mortgage, taxes, insurance, and maintenance, the investor clears around $1,000 a month in positive cash flow. That's $12,000 a year in passive income, money flowing into their account without lifting a finger. But that's not the only win. In just 7 years, the property has appreciated nearly $150,000 in value. Between the monthly cash flow and the appreciation, this single investment has paid off more than most people's retirement portfolios. And we're not even factoring in loan paydown. Every month, the tenant's rent is helping reduce the mortgage balance, building equity for the owner. Now compare that to putting the same $70,000 into the stock market back in 2018. Yes, the S&P 500 has grown, but there's no monthly cash flow. There are no tax deductions, and the value is constantly at the mercy of market swings. Investors often feel powerless, watching their net worth yo-yo depending on the latest headline. The difference is night and day. This is why Minnesota real estate investors sleep soundly, while stock market investors stay glued to the news cycle. Cash flow plus appreciation creates a wealth multiplier effect that simply can't be matched by Wall Street. 4. The big advantage. The biggest difference between stocks and real estate comes down to one powerful word: control. When you put your money into the stock market, you're essentially handing the keys to someone else. You're betting on CEOs making the right moves, governments keeping economies stable, and global events not crashing the markets. A sudden recession, a trade war, or even an unexpected pandemic can slash your portfolio in half overnight. And there's nothing you can do but watch and wait. You're a passenger on a volatile ride, and the steering wheel is firmly out of your hands. Real estate flips that story completely. When you own property, you are in control. You decide whether to raise rents to match the market, refinance to lock in better loan terms, or make renovations that boost both property value and rental income. You can sell when it makes sense, hold when it benefits you, and even leverage the equity in one property to buy another, building wealth layer by layer without starting from zero each time. Then there's the power of leverage, which is where real estate truly shines. Unlike stocks, where you need every dollar upfront, real estate allows you to use other people's money to grow your wealth. Banks cover the majority of the purchase through financing. Tenants pay down your mortgage every month, building equity for you. On top of that, the government rewards real estate owners with tax incentives, deductions, and depreciation benefits that keep more cash in your pocket. This combination, control, leverage, and steady long-term security, is why the wealthy always keep real estate in their portfolios, no matter how much stock they own. Real estate isn't just an option, it's the foundation of lasting wealth. 5. Mistakes to avoid. Of course, not every Minnesota real estate deal is a golden ticket. In fact, one of the fastest ways to get burned is by jumping in without doing your homework. Minnesota's market is strong, but like any investment, it demands strategy and discipline. Let's walk through some of the biggest mistakes new investors make and how to avoid them. The first mistake is overpaying in trendy neighborhoods. Just because a property is in a popular or up-and-coming area doesn't automatically mean it's a good investment. If the rental demand doesn't justify the purchase price, you could find yourself stuck with negative cash flow each month. Smart investors look beyond the hype and run the numbers, examining rental comps, vacancy rates, and long-term tenant demand before they commit. The second mistake is ignoring hidden costs. Property taxes, insurance premiums, routine maintenance, and even unexpected repairs can take a big bite out of your returns. Many first-time investors underestimate these expenses and are shocked when their supposed cash cow barely breaks even. Successful investors plan ahead, building realistic budgets that include reserves for both regular upkeep and surprise costs. The third mistake, and perhaps the most critical, is failing to run a proper cash flow analysis. Appreciation is wonderful, but it's never guaranteed. A market correction or slower than expected growth can delay equity gains. Positive monthly income, however, is what keeps you financially secure. Cash flow pays the bills, cushions downturns, and allows you to keep holding the property until appreciation naturally kicks in. By avoiding these traps, you set yourself apart from reckless investors who chase quick wins. Minnesota's real estate market rewards those who are diligent, patient, and numbers-driven. Done right, investing here can consistently outperform the stock market without the sleepless nights and gut-wrenching volatility of Wall Street. 6. How to start. So how do you get started, especially if you're new to real estate investing? The good news is, Minnesota offers multiple pathways for beginners. Step 1 is research. Focus on Minnesota's top rental markets like Minneapolis, St. Paul, Rochester, and suburban areas such as Maple Grove. Each has unique advantages, from strong job growth to proximity to universities and healthcare centers that drive tenant demand. Step 2 is financing. Don't think you need hundreds of thousands of dollars to get started. Programs like FHA loans allow you to buy with as little as 3.5% down if you plan to live in one of the units. House hacking, living in one unit of a duplex while renting out the other, is one of the smartest ways to enter the market with minimal risk. Step 3 is partnership. Work with a real estate professional who knows the Minnesota market inside and out. They can guide you to neighborhoods with the best appreciation potential and rental demand while steering you away from common pitfalls. Start small, scale up, and leverage equity from your first property to buy the next. Over time, you'll build a portfolio that not only beats the stock market, but also provides financial freedom and peace of mind. If you're serious about building wealth that lasts, Minnesota real estate is the gold mine you've been overlooking. While Wall Street promises returns it rarely delivers, Minnesota's rental market provides steady income, appreciation, and unmatched stability. With low vacancy rates, affordable pricing, and demographic trends fueling future demand, the opportunities are too good to ignore. So here's your next step. Download our free Minnesota Real Estate Investor Guide using the link below. Visit www.iconictowergroup.com and connect with our experts for in-depth strategies tailored to your goals. And most importantly, hit that subscribe button, like this video, and turn on notifications so you don't miss out on the insider tips I'll be sharing every week. Remember, early investors win. The question is, will you be one of them?